Greetings, Algo artisans. Cowboy here. Uh, yeah, Wednesday. It's gonna be like a Friday, right? We have the Thanksgiving is tomorrow. Friday is probably gonna be really slow. The real Friday. So today is gonna be basically the trading Friday. So let's go ahead and jump right into the charts, and we'll start talking about the corn, the Bitcoin. That's looks like it might have caught its bottom. I know it sounds crazy. I know that I do still expect Bitcoin to drop into the kind of the 80 zone, the 80,000-ish area. That's what I do expect. But you know what? This thing, it could just turn around and just go up. It could do it very easily. Alex, good morning. I appreciate that. So what I'm seeing in the algos right now is that the high time frame, the very high time frame is bullish as hell. And then even just below that, it's still pretty bullish. You do have a good pullback in the daily, right? And so it's a question of which pullback are we looking at, right? So what I mean by that is what move up is going to be what we use for the measure of the move down. So the way things work in trading, just a quick little bit of a lesson, is you have impulse and you have retracement, right? The impulse tends to be a hard move in one direction. The retracement is everybody taking profit usually, and that can also go down. You can have impulses down and then a retracement back up. And when you have a lot of, heavily traded assets that the professionals like, people are shorting and betting on the price going down as often as they are going up. So what goes up also works the same going down. And in this case, price is going up. So what's the impulse, right? Well, in this case, you saw that I drew these kind of arrows and all the theory from yesterday. So I'm going to delete this. You can go back to yesterday's show if you want to see what I said about that. Happy Thanksgiving. Thank you, Valley Girl and Hippocratic Oath. Love that name, by the way. So I'm going to leave these arrows up here. These were my predictions from Sunday, and essentially they came true a lot sooner than I thought they would, but looks like I was basically right. So what's our impulse here? What are we going to measure, right? Well, there are multiple impulses, and there's multiple ways to look at that. If you want to look in the immediate sort of recent time on this 3-hour chart, the swing trade time frame, this is an impulse right here, right? If you back out and you look at the daily chart, then this is going to look more like your impulse right here, maybe the daily or even the weekly. That's going to look like an impulse, and it really is. I mean, if you back out, it's looking much more like a straight line. We can demonstrate that in a minute, but we're going to talk about using retracements and some tools to determine how far price may go and where to keep an eye out for price turning around. Well, the first thing is that we have liquidity based on price action. And it's what I had drawn and erased earlier is the price is going up and then it pulled back down and then it went up like this, right? So that's going to create liquidity in this little bit of a retracement, this lower time frame retracement right here. And it did not retrace very far at all. It was just kind of like taking a break on the way up. But this choppy price action in this area is going to create liquidity for price to maybe go and grab right here. And if the forces of the market want things to go up, then all it needs to do is grab this liquidity and continue up. It can do that. Now, we tend to use a tool called the Fibonacci retracement tool. So let me delete that fib. And we're going to apply a fib to this most recent retracement right here. We're going to find that Bitcoin probably went to what's called the 786. So this Fibonacci tool, what it does is if you attach this to an impulse like this, then these lines are basically a percent of how far price may go back. And my man Cool Cat, who is over at Algo Factory, has done a lot of studying and has found that price tends to want to go back to the 786 retracement. It might be a little hard to see on your screen there, but right here, this number, this gray 786, that's 78.6% retracement. Bitcoin tends to like to go to that number. Most things go to the 618. That's called the golden ratio. But in this case, Bitcoin does its own thing very often, and that would take price right to here, which is what it's done. So on this little impulse right here, on this most recent impulse, price has done enough of a retracement. Now, the question is whether or not this impulse here, this little one that we measured, that we put that Fibonacci tool on, is that the impulse that we have to watch? Or is it going to be this larger impulse here from here all the way to here. Is that the impulse, right? Now, if that's the case, then we're going to put a tool on there. I got a question in the meantime from Alex Lopez about the moon phases. I don't pay attention to that. There are people who do. I have tools that probably just incorporate all that data anyway, but there are those who use the moon phases. And yeah, sure, if it works, it works. But yeah, I have other tools. So, look, price goes up, price goes down, right? Like if you are looking at price doing anything in particular, you know, if the moon phase causes it to go up, very well it could, but I have tools that are telling me which way price is going to go anyway, so it's probably measuring all the same stuff. So no, I don't use the moon phases, but I know people who do and they swear by it. Anyway, so here's our impulse. We put a Fibonacci tool on it, and Bitcoin does like to go to the 786, right? Now, it may not go there. It doesn't always go there. It just likes to go there. So what are the levels where Bitcoin could go if this harder this much more extreme impulse is what we have to look at, right? Let me just really quick demonstrate that on a higher time frame, that's just one line. So I'm going to go to the weekly, and that green, this business right here, this just straight line right here, that's the same thing we're looking at. It doesn't even register all that other price action as a consolidation. It's just one strong move, right? So on the weekly or even the daily, that's going to look like just a single impulse. But on the 3-hour, you see with a little bit more detail what happened here, and you can see the price kind of took a break right here. But we can treat this as one impulse on a higher time frame. And what that might mean is that price could go to any of these Fibonacci levels. And of course, the Fibonacci levels are just a guide. It might be there are other things to look at, but if we mark these levels out, the 618 is all the way down at $73,000, basically 74. The the 786, right? So, it could go down to about 73, 74,000. That's where the 786 is. That's where this bit of consolidation is down here that created some structure. That would be kind of an extreme case a little bit, but it would be well within a healthy market pullback. So a lot of people right now, there's a lot of fear in the market, and there really shouldn't be. Bitcoin went up 50 flipping percent, 50% going back to early November. Like within 2 or 3 weeks, it went up 50%. You do not want things to go up forever. You do want things to go back to a certain level, right? You don't want things to go straight up. You want there to be pullbacks. You want there to be sell-offs, because what happens is when things go straight up, when it's time for them to go down, they will go down very hard, right? So yeah, and Alex, that's fine, man. I'm not knocking your moon thing, dude. I'm sure it works. As long as you test it and it works, then it works. Not knocking it. I just have only so much time for so many tools, and the tools I have work. So here we go here, right? You can have also the 618, which is at 79,000. So basically 80,000. Might even dip down a little bit to grab a little bit more liquidity down here. There's a tiny bit of liquidity on the chart that's hard to see, but that's going to be down at like 78,000. And then the 382 is up at 87,000, which basically is an important number. The 382 is where things go to when they're very, very bullish, right? So here is how these Fibonacci pullbacks work. You get a strong, strong move, and it goes back only to the 382. That means it's going to really probably go a lot higher. When I'm trading FOMO, I look for 382 pullbacks, right? I bet you that's a 382 on my little thing here. Let's see. Oh boy, my fib eyes are pretty good. Not quite 382, but there's your 382, right? And 618 is where most things go. And then a 786 is where crypto often likes to go, especially Bitcoin. So we have our possibilities. You have now price could just go up from here, right? The most important impulse could merely be that smaller one up here. We've seen what it's going to do. It's gone down to 90,000 and it's just going to go up. That's possible. I'm not sure that that's what's going to happen, but looking at the chart right now, I would say that's actually possible based on, just based on what I'm seeing in the TA, based on what I'm seeing in the algos. So yeah, that's that. If not, if it breaks down below 90,000, then you're probably going to see 88,000 and maybe even dig a little bit deeper. And I'll be able to really reassess at that time. But there is that chance it could just turn around and just head right back up, and we get new all-time highs. We're in a bull market. Anything is possible. Good. Well, that was hopefully a good lesson. Hopefully people were able to learn. And this kind of analysis to me comes secondhand because I've been doing it for so long, but I do teach people how to do this over at algofactory.tech. So one of the things about trading is that there's a couple of things. There's always opportunities. And I'm going to warn you all right now that the bull market probably will not last forever. And in fact, we might see a top maybe in January, maybe December, maybe February. That's usually when the tops happen. You did have a little bit of a different scenario in 2021 when everybody was just home trading. There was lots of money flowing into the market. There were trillions of dollars being given to financial markets, and things behaved differently in the market than they really ever have at that time. So we did get that weird kind of double top, if you will, in 2021, where May went a little bit higher than January, but by and large, it's going to be January that that's going to show us our tops. Almost always December, January. If you look back at prior data, and so if that's the case, the Bitcoin top might be upon us in the next like month or two, very easily. And then what'll happen is the altcoins will do pretty well, and then you're going to have everything going down, a lot of fear in the market, a lot of volume exiting the market. And if you're just kind of playing, with like meme coins and stuff, then there's a really good chance that that's going to go away. You're not going to have those opportunities like you used to. It's a very good chance of that. So just understand that those of us who trade, who do this kind of work like I do, we are able to go ahead and just continue to make money. We can do that. Not a problem. Doesn't matter what's going on in the market. As long as there's some volatility, we can continue to make money, and we will. While everybody else is, where everybody else is just kind of sitting on their hands and waiting for the bull market to come back. It's not what we're doing. We're able to just make money. So I would recommend come on over to algofactory.tech, learn how to trade like professionals trade, right? Trade like a hedge fund pro. Don't be like a degen, because being a degen doesn't pay off for like 2 years during the bear market. Unless something changes drastically in the way the crypto works, then being a degen is not going to pay off. You're going to be sitting on your hands, not having any trades to make. And it takes time to build these algos. It takes time. It takes work. Learning to trade and trading successfully is not like you see on TV. It's a lot of homework, and it's fine. It's not that hard to do. You just got to sit down and do it. And if you start now, you might have your algo ready by the time that the bear market is here, and you're not going to be sitting out, right? You're not going to be just, I don't have any trades to make. We'll find trades for you. Not a problem. All right. Well, again, thank you for watching. We're going to hop off here, go to the private live lab, and we will see you on Monday. There will be no more shows this week, not Thanksgiving tomorrow, not Friday, and a happy Thanksgiving to everybody and their family, and whatever other holiday substitute they do now for that Thanksgiving. I don't know if it's like indigenous peoples or something. Whatever it is, happy holiday of that. We will catch you on the flip side.
Join us or die.